And let's get going. So today I thought we'd start off with the normal stuff first, because I understand for the last, I don't know, 2 months, I've sort of just ignored everything else and have just been all in on just doing Tau type stuff. So, and I've seen a few people requests for more normal stuff, and I guess this will be helpful for me because I've pretty much had my head in the sand in terms of the wider world recently. So let's get some charts up.
Bitcoin fixes this.
So I want to start with the bigger picture stuff. So the volatility index obviously is a really good barometer on how TradFi is perceiving the world. And obviously in April we had that first sort of tariff wobble. And yeah, everyone really shat the bed because China was also clapping back to Trump's, tariff type stuff. So everyone, the credit markets really got worried about that. And more recently, Israel and Iran have been having a bit of a fight. But what did the volatility index do? Pretty much nothing. And we've already got back down to sort of the green levels. And to me, that's quite telling because I've recently, oh, Jesus Christ, I haven't looked in the mirror today. Just I look horrendous. The I've had to reset my global mental model slightly, not reset it, but tweak it slightly. Um, and it's a slightly better mental model, as in it's a slightly rosier one. So over the last, I don't know, 10 years, I've had a very dim view on the world, like very dim. The world is not controlled by politicians, they're controlled by unelected officials, the World Economic Forum, all that sort of stuff, Club of Rome, and you go down that big old rabbit hole. But what we can see is that global policies are rammed down the throats of every country. So there is a very clear lineage between all the global policies that we're seeing. They do come from the World Economic Forum, and the governments are policy enforcers. So that's not like a conspiracy theory. Look at all the whole ESG type stuff, even plastic type stuff. Everything originates really from BlackRock and the West. So that's all fine. Now, obviously, when you go down all of these rabbit holes, it does take you to a slightly dark place. But one thing that we have seen over the last 10 years is that no matter what happens on the global scene, the everyday Joe is is somewhat insulated from any real fallout. Now, and what I mean by that is like in recent times that let's just say COVID was probably the worst thing that's happened on a global scale in a long time. What happened to us plebs? Well, we sort of had a cushy ride, didn't we? The global world was like grinding to a halt, commerce stopped, businesses were being forced shut, and everyone basically just had to endure it by watching Netflix and getting furlough payments and all that sort of stuff. And so what happened was that the bigger, the governments and the powers that be, they know that they have to keep the population somewhat safe, somewhat agreeable, because that's when revolutions and revolts and riots kick off in a big scale. And with this recent Iran-Israel thing, there was a very real chance that this shit could have got like really escalated. And what we've seen in hindsight now, like we've got like, call it a week of hindsight, is that it was really just a very orchestrated dance between two countries. You saw how like basically every country needs to save face. So yes, someone slaps a country and the country has to be seen to be fighting back or to slap back. But it has been, again, with hindsight, very cordial amongst what are supposed to be bitter enemies. Even Iran, was like in comms, in contact with the US saying, hey, we've got to slap back. We're targeting this base, but don't worry, we're going to miss on purpose. I mean, it's like a script. So I'm tweaking my personal global mental model that, or yes, I see shit hitting the fan down the road, but even if cyber COVID really does happen, which has been my main concern for a while, I'm starting to think that yes, it will be a little bit shit, but ultimately they will make it not as shit as possible, to the point where the public just goes, nah, fuck this. We're going to revolt or have a revolution or nationwide riots. So I guess my world lens is slightly rose tinted now, just a few shades. I'm still highly skeptical of it, of everything, but and so what this means is that I do think, oh yeah, and all of these sort of escapades, whether it would be war or someone bombs, whatever, I think they're just little covers to mask other bits and bobs. So I had a full reset of my portfolio mental model, my investing mental model, my like everything over the last sort of couple of weeks or so. And I think I mentioned in one of the tweets or whatever that, when Israel-Iran was kicking off, I was like, wait a minute, do I need to sidestep Tau here? Do I need to literally sell everything and go to Tether for a bit? And I came to the conclusion of no, which is why I just stayed put. Um, but I mean, it's a healthy thing to do for all of us on a regular basis. Um, so I do still think that the bull market is definitely inbound. Is there a slight possibility it could be translated right slightly? So could it be delayed by a couple of months? Quite possibly. But I still think it's going to happen in the next 6 months, folks. And I know a lot of you, or especially Twitter or whatever, people think that's not going to happen. But what people don't understand is that the markets move very fast all of a sudden. And then all of a sudden there's a paradigm shift. Like all it takes is a week or two of the same media messaging, and then all of a sudden everyone is in, yep, this is a rate cutting environment and printing environment. And that stuff can all happen in a month very easily. Um, and I still think everyone's completely forgetting about the debt maturity wall. The US still needs to refinance $9.1 trillion over the next 4 months. Most of that hits in September. Now, interest rates haven't dropped yet, much to Besant's disappointment. So when we look at the 10-year, if I can ever find it, the 10-year basically started climbing during the whole Trump tariff type shizzle. And only now is it starting to fall. Now, I don't like doing technical analysis on treasuries because it is all fundamentally driven. But I think I have found it very interesting that despite what's going on, the 10-year has taken a pretty good tumble. So from the 1st of June to where we are now, that's a meaningful move down for the 10-year. And also look at the 2-year. So the yields for the 2-year US debt is dropping nicely. And again, I don't really want to do TA, but if you were to show me this chart blind and I didn't know what it was, I'd straight away say that was a topping pattern, wouldn't you? With some sort of neckline around here. And so, if you were to do some form of TA, you'd say you've got all sorts of shoulders and double tops going on around here. And that, a nice move down to sort of these levels here would most likely wouldn't go amiss. And I think for the 2-year, yeah, 2%, 2.5%, I think that's pretty darn reasonable. And I and when we're looking at the US 10-year, same sort of moves down here, I think are to be expected. So everyone's sort of just like has forgotten about the US situation. No one's buying US debt anymore. The Chinese, the Russians, the BRIC nations, they've all buggered off. There's only one person left or one entity left to buy US debt, and that's the Fed. Rates have to cut, money printing has to commence. It, I, that's literally it. That is it. End of trading pub. Every freaking week you see something or someone going, "Rah!" You just have to say to yourself, do the US still have to refinance 25% of their national debt? Yes. Are rates still really high? Yes. Have they printed or dropped rates? No. Well, like the bull market will not start until rates start cutting and interest rates. Oh, sorry, and the money printer starts going brr in whatever guise or way that they deem it. Again, politically and optically, they can't go, hey, it's QE again. So they'll come up with some fancy way to say, oh, it's QE. Oh, no, it's not really QE. It's insert bullshit term. But it will happen and it'll happen fast. And then it'll, yeah. So that's I guess is the bigger type picture. And when we look at the dollar index, I mean, this is just beautiful. I mean, look at this. Oh, gorgeous. I literally gave myself to the end of 2025 for the dollar to hit this level. We're here halfway through and we're already here. And we've really been in this situation, this area for a while now. And so if you were to zoom out a bit, I mean, doesn't that look like a topping pattern to you? Doesn't this look like one massive neck? And also, doesn't this also look very much like a hole that really should be filled at some point? You know, and this is likely what will happen when interest rates start cutting and printing commences. What happens to the dollar? The dollar gets absolutely trashed. And when we look at the PBOC, the the People's Bank of China, um, they're going to have to cut rates and start printing soon. They've also got as equally big problems as the US, if not bigger. Like a lot of people forget that China has over 70 million laborers and they're all on food stamps. Like to put that into perspective, the UK population is only a tad over 70 million. UK population, what is that, 80 million or something? No, 65. Okay. Oh, that's 2023. One sec. Yeah. So basically, that is all women, children, old and young in the UK. It's 70 million. China has 70 million construction workers, all not being paid. Like they have all sorts of massive problems. So um, they're having to dismantle a lot of their ghost cities now. Evergrande is still there, kicking about. It's yeah. I think the world is set up for a huge round of stimulus later on in this year. So my thesis doesn't change as much as it's a very contrarian sort of view at the moment. Um, I find it rare to find someone these days that sort of echoes the same things. But it's and then look at the stock market. Jesus Christ. You know, all the left libtards and whatnot were saying, oh, how Trump's going to kill the markets and blah, blah, blah. Well, yeah, they were laughing on this bit, but what did we always say? It would be V reversed like hell. And it did exactly that. It V reversed heavily. And we are at pretty much all-time highs, back to where we were in Feb. So yeah, it's it's interesting. I do find it interesting. Again, most markets are recovering. The Nasdaq even more so because it's the Mag 7 typically that are the stock market. Um, and yeah, it's interesting. Like I've been toying with a silly idea because I've been looking at all of these publicly listed companies adopting a strategic Bitcoin reserve or a strategic Tau reserve. And I was looking at the market cap of some of these companies, and they are piddly, like teeny weeny. So Oblong that came along, there was OB, no, what is it? Oblong, I forgot the ticker. Um, sorry, PLC. No, wrong. OB, so Oblong, Nasdaq. There we go. Look at the market cap. It's only got a $5 million market cap. When we look at SNPX market cap, again, this only has a $5 million market cap. And then when we look at what's the recent one this morning, I can't remember, Castello, something like that. I actually reached out to them this morning. Just where is it? Where the hell is it gone? I literally 1 second. Maybe it's in my. Here we go. Cat and I PLC. Cat and I PLC. That only has a $3.8 million market cap. And I was thinking, these are such teeny weeny market caps that I don't think it would be that hard to actually buy a failing publicly listed company to then do our own strategic tower reserve. And the benefit of this, and the reason why a lot of people are doing this is that you can borrow money as a publicly listed company on a stock market really easily. You could do these convertible note agreements and bond offerings and all sorts to raise money. And so I know I said it's a silly idea, but I'm genuinely wanting to buy a publicly listed company at the moment just to do our own strategic tower reserve, borrow a fuck ton of money and plow it all into town. Like, I'm going to unmute people here at the moment. Here, everyone can unmute if you wish. Can anyone give me any good reasons why I shouldn't, or why that's a very bad idea? Hell, just for the shits and giggles of it all, it's worth an experience. So yeah, that's on my mind at the moment. What I'd like to do is, unfortunately, I think we'd have to wait a bit because I'd like the hedge fund to buy the publicly listed company and do it that way. That way, town needs to go up a little bit more for us to have more spare cash, and then we can buy a controlling entity in a failing PLC. So
Doesn't that come with its own, sorry,
go
doesn't
for it,
that come
John.
with its own baggage though, Simon? If it's a failing company, doesn't that come with its own problems when you buy it? Or just,
Yeah, but you just shed everything. So if you take SNPX, Synaptogenics, so the James Altucher one, that was pretty much a failing biotech company. It's got one drug which has taken forever to get to market. It doesn't make much revenue. And so it's a failing company based on its core model. But what's happening with all these listed companies is that they're effectively ditching their core model and go, right, we're no longer a trading, we're no longer doing these widgets. We are simply a treasury company. Just like MicroStrategy or Strategy. That was a failing online education platform. And it was
got you. Yeah,
and
yeah.
so I would buy a there are so many zombie companies that are listed on the stock market. There's loads. So I would literally strip everything. So the company has like bugger all OPEX. So outgoings are very low, and then just lever up to the hilt with bond offerings to, as in debt, raise money, and then buy
Saya,
and then
so
buy Tau.
Sorry, Simon, it's Julia.
Hey,
Um,
Julia.
Hiya. Just a broader question. I get what you're saying on that PLC thing, and I've been watching all the uh revenue generation kind of X podcasts and whatever you've been doing on the all the subnets, and I can understand all the excitement about everything in Bittensor and the subnets. It's amazing the stuff these guys are all doing. But my old job was overseeing massive programs of work in financial organizations, like hundreds of millions of pounds we were
Nice.
spending. And one of the one of the things we key looked at is the risk mitigation. And all that just keeps popping into the back of my head when you're saying I'm 100% in Tau, I'm all in on BitTensor, etc., is where are you hedging yourself? Because if you're going all in on this, what if something did go horribly wrong? You've not spread any risk as far as I can see. I know you're spreading it amongst subnets and between subnets and root and all the rest of it. But I know to us, obviously, I'm really interested in what you're going to be saying about the Hargreaves Lansdown stuff shortly. I think you're saying you're discussing about moving from Ethereum to, is it
Yeah.
SMP, or not SMP, but something like that. I can't remember what you said now. Um, and it's all I'm asking is if I'm looking at maybe following your move on that out of Ethereum, the Ethereum tracker on Hargreaves Lansdown into something else. But it's just a question about the all in on Tau. And I've just got this little voice in the back of my head going, spread your risk, spread your risk. What, all in on one thing seems really risky.
Hmm. Okay, I get where you're seeing where you're coming from, but when you look at what BitTensor is, it is the subnets. So although Tau may be one thing, it's not. So if you okay, there's 128 subnets right now. Let's say, just for all intents and purposes, only 20 of them have any real world value. Yeah, let's say 20 of them are actually doing something amazing. Well, that means buying BitTensor or Tau means you are effectively buying the future promise of the output of these 20 amazing subnets. So, and like I'm having all these really deep conversations with all these subnet owners and teams. And I guess what I'm seeing a lot of stuff that others aren't getting to see or hear at the moment. And that's probably where a lot of the discrepancies or the gap of understanding comes in. But when I'm having a chat with a good subnet, I see that they've got a team of 5 to 15 engineers typically. They have a very clear route to market. They have a very clear revenue plan. They have a very, very low risk, high probability outcome chance of hitting their revenue plan. And I go, wow, screw BitTensor. Like, if this was a company on its own saying, hey, Simon, do you want to buy some of our company shares? I'd be like, yeah, I want some of that. And then I have another chat with another company, an AI company doing something different, going and they're ticking all of the boxes and revenue plans, yada, yada, yada. I go, holy shit, I want a chunk of you. And so fast forward, I can't even count. Check this out. Like, I'll share my calendar. This is my calendar this week. I mean, yesterday, like all the Zooms I had, like I'm constantly like my whole day, every day is basically doing Zoom calls. With, I mean, Jesus Christ, DCG reached out to me the other day. Did I mention that? Yeah, there's all sorts of stuff happening at the moment. There's a possibility Barry Silbert may be giving me, or DSV, a big chunk of Tau to trade on behalf of Barry. I mean, shit, it is ridiculous. Anyway, going back to your question, there is no hedge. There is no hedge. This
I
is
guess
like going back to the 1990s and then going, oh my God, internet. I need to be all in on everything internet wise. There's no hedge. It's just because in my brain, there are three game-changing global networks. You have the internet, which is the first game-changing global network, and it was a global network of information and transfer, relay, dissemination, etc. You then have the Bitcoin protocol, which is a global network of information and wealth transfer. And now we have the third coming, which is Bittensor, which is a global network of information, wealth, and AI/intelligence transfer. It is the internet, the world wide web of AI. So yeah, the easiest answer is there is no hedge.
Can I have two follow-up questions, please?
Yeah, go for it.
Right, first one is, and excuse my lack of understanding, all right? I do my best, but I'm not as into it as you guys are. But firstly, is there an opportunity for a fundamental failure of the Bittensor technology, which could effectively bring down everything that's sat on it? And the follow-up question is, if that did happen, or whether it did or it didn't, can subnets just decouple from Bittensor and sit on some other platform, in which case it really matters what we do with how we engage with subnets, because depending on which ones we go with, if they bugger off to some other network or whatever, that my head can't get around the stability of it all and how transient these things are and how vulnerable they are. So that's what I'm trying to get my head around. Is it a fixed situation, or is it actually very fluid?
So your first question, what is the biggest systematic risk for Bittensor itself? I think about this a lot. And I mean, it is a decentralizing network. So OTF still have a fair bit of clout within Bittensor, so they could royally screw up or do something which would hurt it. It wouldn't kill it. It would just delay things. A bit like Casper. Casper's management team has completely effed up. Catastrophic failure on all things. So, I mean, that in itself hasn't destroyed Casper, but it's pushed it backwards a fair chunk, in my opinion.
But what
Obviously,
what about an external influence? A hack. A hack.
Yeah, I was just about to say that. So
Yeah.
Bittensor's engine, let's call it, is Substrate SDK. So it's the Polkadot engine. So Polkadot has been relatively well battle tested because it's been around for a long time. You have hundreds of projects that use SDK Substrate, and a lot of any potential attack vectors that would have happened on Substrate would have already happened by now. And Bittensor stumbled into a Substrate sort of bug last month, which was the Matryoshka incident. And it's interesting, that bug is applicable to any crypto that uses Substrate. But the reason Bittensor found out is because there's so much activity going on Bittensor that it just stumbled across this bug. So yes, there could be a Substrate attack. There hasn't been one yet. Doesn't mean there isn't. So that, like with any crypto, that is always a risk. Quantum hacks are nowhere near. Everyone's talking about quantum at the moment. We're nowhere near any form of relevant quantum capability. I've gone down a right rabbit hole with quantum over the last couple of weeks. I mean, one of the main issues with quantum computing is the dilution fridge. Like, there's only one realistic way that we can supercool particles down to near 0 Kelvin. And at the moment, we can't, it's actually physically, so with thermodynamics, it's literally impossible to take matter to a state of 0. So 0 degrees Kelvin is impossible. And so what we can do is supercool stuff down to very, very close to 0. So at the moment, the dilution fridges that we use for quantum computing takes temperatures down to 5 to 10 millikelvins. So we are literally fractions above 0 degrees Kelvin. And the way we do that is a dilution fridge, and we have helium-3 on one side, we have helium-4 on the other side, and you evaporate and dilute helium-3 into helium-4. And it's a recycling sort of contained system. So And helium-3 is very, very expensive. So a liter, 1 liter of a liter of helium-3 costs about $3,000 for 1 liter. Each dilution fridge, depending on how big the quantum computer is, will need 3 to 5 liters of helium-3. So it doesn't sound that much. But on Earth, helium-3 is incredibly rare. And that is why the Chinese have been mining helium-3 on the far side of the moon for the last 18 months. So when people start talking about not helium-3, quantum computing, it's all very well and good, but like with anything, logistics will eventually start to come around, because when, let's say, a stable form of quantum computing occurs, and that's the key word there, stable form, then all of a sudden it's going to be quite prevalent everywhere, and we're going to run out of helium-3 and a few other bits and bobs. Also, it takes a lot of, where the conversation normally then goes is, well, what about, quantum attacks on Bitcoin or whatever? Well, I think I mentioned last week, to do a quantum attack on SHA-256, which is what Bitcoin is encrypted with, you need something like 2 million qubits. So a 2 million qubit computer, quantum computer, is donkeys away. Like, it's a long way away. Like, the best we have at the moment on the planet is 1,100 qubits. But yeah. So that's another thing. So that's a long answer to your first question of systematic external risks for the Bittensor. It's the same as any other crypto, any other stock, any other thing. So I guess a hack is the real thing there. The second point is, can subnets just bugger off to a different network? Very few can. And this is what I actually like to see when I'm doing my OTC deals. Can this subnet make real world revenue? And if Bittensor were to vanish tomorrow morning, could this subnet continue living, breathing, and making money? So that's a question I have when I'm chatting with these subnet owners, and there's very few that can. I asked Max, the CEO of Score. So in fact, I asked all three of them. There was Max, Justin, and Nigel there. We were having drinks, and I was like, so tomorrow Bittensor vanishes. All of your miners are gone. How much money and how long will it take for you to replace them? And what really impressed me was that they just busted out the answer straight away. And it was Nigel that said this, and he said it will take £500,000 a month to replace the miners, and it would take about 1 week to replace the miners. So that, like, they've obviously thought about this. So yeah, Score could continue without Bittensor, but it would cost them £500,000 a month in OPEX increase. But it would take them a week, I don't know, let's just say 2 weeks to replace them. So not all subnets can do that. Not all subnets are adequately financed enough to be able to do that. So yeah, there's lots of risks in anything, but the fact that there are so many subnets all doing so many different things is the de-risking element. That is the diversification of the portfolio. But that's just my take.
But that's only if we're in all of them.
I'm not in all of them. We're only like 30 or 40.
Well, that's what I mean.
Yeah.
Have we picked the right ones? But I know you're doing your due diligence on that, so you're helping point us in the right direction. Thanks very much for that. Sorry to take up so much.
Yeah, no worries. And your other comment is also a very good point. Are we in the right ones? The honest answer, no one knows. But one answer I'm very, very certain on is that you cannot just buy, hold, and forget. Not in this game. I know everyone on Twitter loves to just say, buy the top 10, buy the top 20, hold. And it's such a lazy, and when you understand detail, it's a stupid way of going about subnet investing, because the top 10, top 20, the amount, the subnets are constantly rotating in and out of it. One day a subnet will be in the top 10, the next day it'll be in the top 30, like just because it's shat the bed or something. And so the only way to do a set and forget strategy for subnets is to buy good subnets, ones that have a genuine business model, and then you have to hold it for 2 to 3 years, because that way the APY offsets any of the price fluctuations. And so, yeah, and this is why I think you have to be at the very least semi-active with your subnets. And like when we're looking at here we go. Oops, let's get. Where's my pen? Pen. So typical subnet does this, bleeds out a bit, and then goes on. And then obviously I've got my little bands, half a tau, boom, 1 tau. Like these are my price ceilings, which I've talked about pretty much every trading pub for the last 2 months. And like when you look at the future of subnet prices, these bands actually, if I was to be really pedantic, they're going to be more like this. Now the angle is a bit steep there, but if we were to do something like this, yes, those price ceilings at the moment are about 0.5 tau and 1 tau. But as the protocol grows, as liquidity pools get deeper, as the circulating supply of tau and alpha increases, and also the sum of subnets also increases, and we can see this this constant growth. Hold on, I need a browser. Where's my browser gone? There we go. Tau app. Metrics. Valentine's Day. Like we can see the growth here. Like this is, the green line is the protocol emissions. And like we can see the growth of the amount of tau leaving route, the amount of tau going into subnets, all that sort of stuff. So as time progresses, this glass ceiling in terms of subnet price will also increase. And therefore, if you're to put in a semi sort of band, like a band of what prices are likely to oscillate around, is it's going to be something like this. And I genuinely think that, obviously, let's just say that this chart is log now in terms of distance, and let's say, at the moment we're here up until, this line, let's say, is 2026, but from here to here is like I don't know, let's say 2050. Okay. And let's take a good subnet that's doing something in the real world, getting real world value, yada, yada, yada. Like, it's probably going to do something like this. It'll have its own mini bulls where it has a new announcement and a new market share, boom, and then the price will crash. And it'll be like Shoots. Shoots went up to like 0.44, then it crashed to 0.18, and then it's going up to 0.2. Like Shoots' range is pretty vast, right? But Shoots is freaking awesome. And so I think it's just going to do this, but not sideways like I originally thought. It's going to be slightly angled up. The angle that I've drawn these pictures are steeper than they actually will be. And therefore, the only way you can just buy, hold, and forget is buying these, knowing that the average price of whatever subnet you're getting is going to be relatively stable, or whatever the mean of their range is. And then you just go, after 2 to 3 years, the APY will bail you out of any price fluctuation. And also the price of tau plus the APY will bail you out of, then, yeah, really good investments. So this then leads us to one of the questions, which is we go into Discord. Oh, damn it, we're already talking about Bittensor. I meant let's do the charting first. Actually, no. Whilst we're here, we'll carry on. I will get back to the charting, folks. So I had a couple of questions that popped up in here, and I will get to these. But one of them, it was talking about, which subnets do you look for? Now, obviously, I've given you my sort of short list of OTC type selection process. I've added stuff to this over time. But let's look at this from a higher perspective. Okay, the higher perspective is what it does is like the sectors. So remember, Bittensor is an island in the middle of the Atlantic. It's just popped up, and everyone's racing to build roads and buildings and bridges and dams, etc. Okay, so at the moment we're in the layer one of stuff, and let's just call this infrastructure. Okay, this is the, let's say, phase one, infra. Now, so the second phase, so phase two, that will be, let's just call it intelligence. And then phase three is retail life-changing apps. And that could be as anything menial from an app which you use several hours a day. When Facebook came out, people were spending hours every day. In fact, people still spend hours every day on Facebook. So technically, you can call that a life-changing app because it has grossly affected your daily habits. So it could be something menial as that, or it could be a life-changing app like you've now got a cancer screening app on your phone, which is better than any oncologist, and you can just take pictures, take naked selfies of yourself every month, and your own phone will tell you if you've got cancer or not, and it will do your own personal blood works, all that sort of stuff. So Bittensor right now we're in phase one. We're nowhere near phase two and three at the moment. So when you're looking at and this is AI infrastructure. So what is AI infrastructure? Well, at the moment, the roads, the buildings, the pipes, the sewage, the fiber optics, all that sort of stuff, that is the full stack AI, which is, I'll type this because it'll be quicker. And please bear in mind that everyone has different terminologies for this full stack AI, but it'll make sense when I start typing. Data curation. No. Generation, curation, gleaning. I think I'm going to need more space here. I'll just make it small for the moment. And it is worth all of you trying to learn this stack, which I'm about to teach, because it really does help your understanding of AI. And I'll go through this in a sec once I've finished typing it out. And then before that, actually, oh god damn it. A little island is getting in the way. Okay, that is phase one. So obviously in the real world, you've got hardcore infrastructure, which is energy generation and storage, makes sense. You need data centers and also raw compute. And then you also need networking. So it's actually you can't just hook up a whole bunch of NVIDIA N100 H100s and think you've got a really good computer there. The way that they all interact with each other is actually really, really hard, and that's what Elon has solved with his Colossus and Colossus 2 in Memphis. And then once you've got the hardcore real world infrastructure done, the AI hardcore infrastructure is data generation, curation, and gleaning. So obviously data is the gold dust of AI. So you either need to generate it or curate it or get it from somewhere. Slash acquisition. Because pretty much most AI has all of the data on Twitter and YouTube and stuff like that. And so we will acquisition. Acquisition. And so you'll see a whole bunch of big companies gobbling up like research companies and departments or universities and stuff like that. So they have unique siloed data that no one else has. And then once you've got a huge amount of data, you need to clean it and label it. And like if you're scraping Twitter and Reddit, there's so much shit that you don't want in your model. Garbage in equals garbage out. So this is why Meta bought Scale AI for what was it, $14 billion last month, because that's what it does. It's great there on cleaning and labeling, and that's what SN33 does with Ready AI. You then have pre-training. And SN9 does distributed pre-training, which was deemed impossible a year ago. You then got training, and then you got, this is what SN3 Templar is doing, distributed training, which again was thought of as impossible about a year ago, but it's happening. You then have fine tuning again. Distributed fine tuning was thought impossible about a year ago, but Subnet 37 is doing it or almost doing it. And then you got evaluation and validation. So like, so for me, I want hardcore infrastructure. I want exposure to all of these things. By having exposure to all of these things is my form of risk mitigation. I haven't got exposure to all of these just yet. And then phase two is the intelligence. So let's say you have an app or a company or a subnet that's got, all of that's got a certain amount of, let's just call it inference. But as in they've computed the data and they've given a response. But what is the, what are the patterns here? Or what is the real meaning? Patterns slash meaning slash dominoes. Okay, so this is where the real intelligence comes in. So if I drop my pen like this onto my table, I could have an like vision. So I could have a capability which is sight, and I can see that dropping my, when I let go, the pen's going to drop. But it's the intelligence of my brain that deduces other things from that. If I were to drop my glass of water on my table right now, my intelligence tells me it's going to make a hell of a thud. It's going to topple over. Water's going to splash everywhere. Water will get in my keyboard, which would maybe render my keyboard inoperative. And I'm going to have to clean it up. And then I'm thinking, do I have any kitchen tissues in the kitchen to help clean it up? And so like we intrinsically or we inherently know this stuff as a human. But computers can't do that yet. AI is very close to understanding that. That is intelligence. And so that's what phase two is, getting, seeing the wood from the trees, and that, the dominoes that the intelligence derives. And it's only in phase three, once we've sort of really understood intelligence, that we get life-changing apps. But maybe not for retail, but also for the world, life-changing app. Like if SN25 can really crack protein folding, or Metanova can really accelerate drug discovery, and we find some really good drugs. Like these are life-changing apps. We're a long way off. At the moment, Bittensor is on day one of birth, pretty much, from where we will eventually be. Yes, Alan. No, that's just backing up. Does that make sense, folks?
Yes, it does. Yeah.
Cool.
Yes.
No. So yeah, and I
Hold
guess
on, let me see if I have it.
Sorry, Alan. I'm gonna mute Alan. I think he's on a call. But yeah. So I guess my risk mitigation isn't in the traditional sense. I have no hedge, but I am hedging against the future. And the way to hedge against and prepare for the future is to really lean into this. For me, this is like finding the internet in 1995 and going, holy shit, over the next 20 years, the internet's going to infiltrate every person on the planet. This is what AI is going to do. AI is the third coming.
Sam, can I?
Oh.
Yeah, go for it, Dustin.
The question she asked initially, do you have any hedge? And you gave a very good long explanation. Let me reframe that question. If you were going to your kids' school, maybe when they're a little bit older, and teaching about investing and finance and just education in general, would you teach the same way? I found this thing. I'm going all in on it. There's no hedge, no diversifying. This is the right thing to do.
I would tone it down a lot, but what I would never talk about is diversification. Diversification is, I mean, even even Warren Buffett, which is everyone's favorite investing god, says diversification is for the ignorant. And he even said, someone can find the quote, but diversification is a hedge against ignorance. And it makes little sense to diversify if you know what you're doing. So these are pretty much the words of Warren Buffett and Benjamin Graham. And when you look at every billionaire on the planet, how do they get rich? There isn't a single billionaire that's actually made their wealth from diversification. Diversification means you are willingly and openly spreading your bets, your money, your purchasing capital into things that won't do well because you don't know what you're doing. Every billionaire on the planet that's actually made their money has done that via going all in on one thing until successful. Every billionaire. And I'm not talking about inheritance babies and all that sort of stuff, because if they've, so if you look at any business owner, they've gone all in on their business, all in. And so if you're talking to kids about wealth generation, you have to really get them understanding that one, they need to know about the global capital hurdle, what purchase, as in 15% per year with, central banks printing. And that if you're expending your time, literally your time in making money, you've got to make sure that you're growing your money at a faster rate than what your currency is shrinking, because all fiat currency is a shrinking ice cube. So once you've fully understood that, you then have to look at, okay, what are the most time efficient ways to make money? So in this case, business is literally the only time efficient way to make gross amounts of money on on top, for actual wealth. Whoa, got a thumbs up here. This is cool. AI, there we go, life-changing app. That's weird. No? Anyway, a thumbs up.
Siam,
Ken.
Siam, just while you're in a
So,
pause. So,
sorry, can you hold it one moment,
yeah,
Julia? Just so investing, so business is literally the only real proven way to get rich in a very short period of time, as in within 10 years, 10 to 15 years. If you then look at it from a tax perspective, look at all the different ways of forms of income and look at how they're all taxed. PAYE national insurance, so salaried income is the highest rate of tax, the highest. So from a first principles perspective, if you're going to be expending your blood, sweat, tears, talent, and time trying to earn money, what you don't want to do is spend all of that time and energy on one, the highest form of tax, and also the lowest form of income. And that's what a job is. I'm not knocking anyone that has a job, but from a first principles perspective, it is literally the worst way to make money. So you have to get the kids to understand that. And then they'll realize, okay, I need to be a business owner. And then if they do well as a business owner, well, part of business is knowing that you have to do, fail, learn, and pivot until you hit your goals. And the rate of which you do, fail, learn, and pivot needs to be fast. Most people fail slow. If you're going to fail fast. And then you got to pivot quickly and don't cry over spilt milk. And then once you start making money, you then also need to get the kids to understand that, okay, you got the money, but if you just diversify it and spread it everywhere, you're going to bleed out to inflation and the currency dilution. So then the next case is, okay, what assets make more than dilution? And there's nothing. Gold doesn't. Gold at best remains flat over a long epoch. Literally the only globally scaled asset class on the planet that beats currency dilution is Bitcoin. That is it. Now, Tau is Bitcoin squared, effectively. So that's my answer to you, Dustin, about teaching the kids.
So with that do, fail, learn, pivot, if Tau were to fail, there's you just fall on your face and then pivot to the next thing.
Yeah. So let's say Julia's right or not right, but let's say a metaphorical asteroid hits Bittensor. I'm all of a sudden broke, because I will be, by the way. If Bittensor fails catastrophically and I don't exit swiftly, I will become broke. Not poor. Broke and poor are mindsets. Poor is a permanent mental model. Being broke is temporary. It's just temporary cash flow issues. So if I were to go bust, I would most likely go bankrupt personally as well. So there's a 1 year, or really it's 18 months. There's 6 months of bollocks before you go personally bankrupt. Then you're personally bankrupt for 1 year. You then exit bankruptcy. Then you can live your life again. So there'll be 18 months of pausing of my financial life, and then I just pivot and I'd set up another business doing whatever. So this is the key thing kids need to know. It's bounce back ability. You got to be able to bounce back. It's also worth teaching them that they should, this is where I'm going against my own rules. They shouldn't really take risks that will push them back more than 18 months. That's yeah. I mean, technically, yeah. If all goes wrong, my life is fucked for the next 18 months. But I'll make it back.
A couple of points on that billionaire thing. I get what you're saying. The ones that have become super successful went all in, but there must be a load of people that went all in and ended up broke.
Yeah.
That's the other side of the coin. And is there a risk of like a positive bias here, that you're so far into all that stuff, that you're so positive about it all, that I mean, people like me that are more on the outside looking in rather than in looking out, you know, like I say, I've just got this slightly more risk averse mentality. And also, I'm not your age. I'm significantly older. I'm effectively retired. I can't go back into a job and earn cash. So if I bung everything into
completely agree.
blows up, that's bad news. So that's
I completely agree.
I think we're just in a different place in our wealth accumulation and whatever process.
And in the WAP, Oh wow, I'm wearing the shirt. In the WAP, I do mention age.
Yeah,
Age
I know,
is a
that's why I
real
bring
thing.
it up.
Yeah. So age
Because I
really
did the WAP.
is a big thing because I have the energy and the hungriness to
Correct.
have a high bounce back ability, if that's even a word. If one doesn't have the time nor the energy to bounce back, then your activities need to be less aggressive. And so a very low energy, less aggressive way to preserve wealth and make wealth is Bitcoin. It is literally the financial Noah's Ark. You need to treat Bitcoin as the modern age of gold. You know, I'm starting to not like the gold and Bitcoin, the gold to Bitcoin comparisons because like gold is so shit compared to Bitcoin in so many ways. And I say that as an ex-bullion dealer. I really do. But going back to one of your previous points is that, you know, I'm so deep in Bittensor, you know, I could be missing the wood from the trees. That may look like the case, but one thing I know myself is that I know, like I do have a good sniffing radar to know when to jump ship. So for those that have been in RT for the last, let's say, 3 years, how deep was I into Casper in the early days? I was all in. I was mentally all in on Casper, wasn't I? How quickly did I shed Casper? In a relative heartbeat. So the other thing I know about myself is that because I look at everything from a first principles perspective every day, all day, and literally every day I reanalyze my whole portfolio. Like, is Tau the right thing? Yes. Okay, move on. And I say this to myself like every day, like, and as in that question, should I be in? Should I be out? But the moment I start having questions about, oh, things are looking a bit iffy, and you know, I will get out. And as you saw with Casper, I got out very freaking quickly. I was pretty much all out between 16 to 18 cents. Pretty much. So although it may seem I'm emotionally connected to my bags, I'm not, I'm definitely not. And I will happily go, right, I'm out. Just like I did with Casper. I still love Casper. I think the tech of Casper is freaking amazing, but it wasn't the right portfolio move because it's it's not in a niche which is going to ride the hype tsunami. Because at the end of the day, we're all investors, and we're not investing in widgets or services or tokens. All of that is bullshit. We are investing in future human hype and eyeballs. We are all day trading attention. That is what you are as an investor first and foremost. It should be the very first lesson I teach in the Real Estate Trader course. We are not buying or trading assets. We are trading the perceived future hype of large masses of humans. That is what investing is about. So the perceived, so at the moment, you know, it's what, the 26th of June, 2025. At this point, with all my best guesses, the biggest mass human hype wave that's incoming in the business scene is AI. I mean, even James Altucher said in a tweet the other day that $30 trillion is flowing into AI over the next 10 years, something like that. All it takes is a teeny weeny percentage of that to flow into Bittensor, and that pushes Tau to our wildest dreams. Yeah. So is it fair to say 30 trillion is going to enter AI as a whole over the next 10 years? I think that's a fair shout. Is it then fair to say that Tau could get 1%? No, maybe a bit of a stretch. I think for some people it may be a bit of a stretch, but let's just say Bittensor gets 1% of 30 trillion. Well, what is that? 300 billion. Will it get 300? Yeah. So then, like over the next 10 years, so we can do the calculations here. So, you know, $300 billion mark, and let's say that's, you know, the total market cap. So I've just done 300 billion divided by the circulating supply. let's be really pessimistic. Let's say over the next 10 years, I could look at the curve, but let's say it's 12 million in circulating supply. That's $25,000 tau. And I'm being really pessimistic here. So no, long answer to your questions. There is no hedge. But it's all caveated in lots of nuances from age, personal abilities, personal energy, personal age and time, and all that sort of stuff. But the easiest, low risk, low energy thing to do is just buy Bitcoin and sit happy for the rest of your life. And like one of the best pictures that I can find for you guys is this. Come on, my computer's frozen. Seriously. Right, I'll move off screen, stand by. It's in presentations, DSV. Here we go. Where is this list? Boom. Look at that. Just look at that for a moment. Bearing in mind, we're taking the average house price, and we've taken the worst price of Bitcoin per the year. And then there's 2025. But if we were to do the real life calculation right now, let's do this. And let's just use GPT. Here we go. What is the average UK, oh God's sake, average UK house price today? UK wide. Bad prompt, I get it. I understand. Blah blah blah. Okay, so let's say 270. Okay, average house price. And the price of Bitcoin right now is 107. Wait, so 107, 140, but the GBP rate is 137. Jeez. Oh my God. So let's just say it's $107,000, and then we need to divide that by 1.37. So that's 78,102. 78,102. What was the answer here? 270. So 270 divided by 78,102, 3.45. So if we were to use actual prices right now, 3.45 Bitcoin will buy you an average price house outright, mortgage free. And I don't think it will be long until this number gets to 1. So this is probably the best Bitcoin slide out there. It's a clear image of the purchasing power accretion compared to a diluting, melting ice cube that is the pound.